well said. Exactly right. And so, a couple of guidelines then from there is if you're buying on an uptrend and you're trying to you get into that correction within an uptrend, if you're buying on weakness, you don't exactly know when that market's going to turn around and go back up. So you got to give that kind of entry more room, and so you got to place the stop below some previous significant low, or maybe below a 50-day moving average or something like that, to give it more room, because you might buy it at support, but that support can give way somewhat before the trend reasserts itself. And if then on the other hand, if you're waiting for confirming strength after a correction down in an uptrend, maybe you require the market to close above the prior day's high or something like that. Why then you can place the stop below that most recent newly formed low point. But you notice I said place it below. If you place it right at the low, you're going to get caught again, because the market loves to trade right back down and test those lows, take you out, and then take off. So you gotta give it a buffer. Those are very key principles there that make a whole world of difference in your trading.
And it's funny, I think even someone listening to this audio now, even regardless of what system they're trading or what method they're currently using, if they've even got a method, can actually learn quite a lot just by applying those principles to their trading system. Even if they do nothing else, that's guaranteed to improve their trading. So great points there, Bill.
Yeah, thank you. I couldn't agree with you more. I wish I'd have known what we just talked about here. I wish I'd known that years and years and years ago.
Yeah.
Because I had to learn the hard way.
I'm curious. Have you done any have you happened to read a book, Trade Your Way to Financial Freedom by Dr. Van Tharp? That's one book that I read, which actually really gave me some great insight into my personal methodologies for how I handle my money management and things like that. Obviously, stops included with that as well. It is a fantastic book, very, very dense book. But did you get a lot of your learnings through reading, or was it more through trial and error? Because I know you've been doing it for so many years now that it'd be almost a combination of the two. Or
I did not read that book, but I know about it and understand it's excellent. And you're confirming that. No, my learning came from experience and from going to seminars and reading a lot early on. I'm talking years ago. And in those days, frankly, the educational material was not very good at all. Unlike today, where certainly not all educational material is good, but there is a lot of good stuff out there now. But when I was learning, there wasn't. And so my learning came out of experience. And then when I formulated my own ideas and started doing well as a result, then I found that I could quickly tell whether or not, an author knew what he was talking about.
I was going to say, it's funny you say that, because out of the just about all the successful traders that I've had the good fortune to chat with, it all comes back to that classic thing of every successful trader that really ends up making it ends up. It's almost like when push comes to shove, they need to find a system that suits them, because it's almost like everybody has these different levels of, different risk profile, different amounts of capital, different amounts of time they can invest in the market. And I don't think one system or one method on its own, you might hit it lucky if you did happen to choose one, but you really want to go with something that gives you a few different methods, so that way, because everybody's different, and you almost choose what best resonates with you or the individual.
Yeah, absolutely. And you can, for that reason, you can take a good method and personalize it, so to speak. If you want to modify it a little bit here or there, as long
Mm.
as you don't violate any of the basic trading principles, yeah,
Yeah.
you can adapt your style to it. But one of the things I caution in that regard is never make it too complex. There's a tendency that traders want
Yeah.
to overcomplicate everything, and when they do that, they don't get any benefit from it, and they lose their discipline in the process.
I think the reason some traders do that, because I've actually thought about what it is that makes traders actually want to do that, and I know traders, just by their very by their very nature, a trader usually is someone who is, a little bit more educated, a little bit more sort of, they've spent the time to actually look into it, and because of that little bit extra further education, they feel the need to overcomplicate it because it somehow makes them feel smarter, or, oh, look, that's going to give me the edge over the market. But just like you said, though, as long as you stick to those time tested rules, and do that in the simplest method, you're going to have the most amount of success that way. I know I'd read a report that you'd put out some time ago now, and it pretty much hit the nail on the head, which was, you quoted Einstein, which I think I should probably remember it off by hand, but
Yeah,
it was,
yeah,
what's the
yeah.
quote for that one?
He said the solution to any problem should be as simple as possible, but no simpler.
Perfect.
Isn't that something? And it
I
applies to
think,
trading for sure.
yeah, because people do. They have a tendency, especially with all the different indicators. All you have to do is open up your charting package, and you'll see 50 million different indicators in there, and all these different methods and ways of manipulating the five pieces of data: your open, high, low, close, and volume. And really, that's all an indicator is doing. It's just manipulating that data, and the more you manipulate it, it's almost like the further away you're getting from what it is you're trying to analyze, and you're just making it all one big mess, basically.
Yeah. Yeah. The way I say it is you want to use a handful of common indicators, but
Mm.
with uncommon trading tactics. That's where you get your
Yeah.
edge. Everyone's looking for it in the indicators, and it's not in the indicators. The indicators are a guidepost, but you got to use uncommon trading tactics, and boy, that's where you really supercharge the value of the indicators.